If you've been waiting to buy your first house because you think you need 20% down for your minimum down payment, you're not alone, but luckily you're also incorrect. In this video, I'm going to break down exactly how much you need the minimum down payment for the different traditional loan types. And it's way less than what people think. Let's start with the myth, the 20% down rule. Believe it or not, a lot of people still believe that they need 20% for the minimum down payment to buy a house. For example, and to put things into perspective, if you're buying your first house for, say, $700,000, 20% of $700,000 is $140,000, and that is just for the down payment. And we're not even talking about closing costs. Closing costs I'll break down in a different video. The good news is this 20% down payment rule is very outdated. So what's the real down payment requirement today? FHA loans allow for a minimum of 3.5% of the purchase price as your down payment. This 3.5% down option is available to people with credit scores of 580 or higher. FHA loans are great for people that have lower savings and may not have the best or the strongest credit. Conventional loans, believe it or not, do not require 20% down. Although it is more advantageous for you to put more money down, the minimum down payment for a first-time home buyer is going to be 3% of the purchase price. Now, this 3% down option is available for credit scores of 620 plus, but with conventional loans, they're going to be priced a little bit different as far as your interest rates. So the closer you are to that 620, the higher your rate's going to be, and the higher your mortgage insurance is going to be. So typically in these situations, take a look at the FHA versus the conventional to see which is going to make more sense. That's if your credit score is 620. If you have a credit score of 740 or higher, the conventional loan will more than likely be a better option because now the loan level price adjustments are much smaller and your mortgage insurance is more than likely going to be less than the mortgage insurance on the FHA loan. And the conventional loan doesn't have the mortgage insurance premium like the FHA loan does, which we'll talk about mortgage insurance premiums in a different video. Now, VA loans require 0% down as far as the minimum down payment. So you can finance the entire purchase of the home, which is really nice. Now, USDA also allows for 0% down or 100% financing. The only downside with the USDA program is it's only for rural areas. So if you're in a metro area or you're in a more condensed area with a lot of people, the USDA loan might not work. But if you're in somewhere where it's a little bit more remote and that's where you're looking to buy, the USDA loan is a very good option. Now, even if the minimum down payment at 3% or even 3.5% is hard for you to save up to, then we can always utilize down payment assistance programs, which are several of them can be state run, and there's also private down payment assistance programs that work very well if you actually need them. I personally use down payment assistance program to buy my first house, so I'm an advocate, and I would say if it makes sense for you and you want to, and homeownership is really something that you want to do and is part of your future, then down payment assistance is definitely a good option. Now, don't get me wrong, you can most definitely put 20% down on any type of loan if you want. Now, if you're going to put 20% down, conventional is obviously going to be the better option because there won't be any mortgage insurance. FHA is still going to have mortgage insurance even if you do put the 20% down. So if you do have that 20% down, you're going to see better interest rates, you're going to see better terms, lower monthly payment, all of that comes with it. But the downside obviously is you're going to have more money that you're going to have to invest initially. Now, all I've been talking about so far is just the down payment. And that's the minimum that's required by the lender for you to qualify for your loan. There are also closing costs, and these fees are something that is separate that you cannot finance. And I will go over those in a different video, but really what those are going to be mostly fees for third-party companies like title and escrow, the appraisers, property taxes, and you're also going to do homeowners insurance. Those are going to be the typical closing costs that you're going to run into. Oh, and of course, some lender fees as well. If you're wondering about how much home you can actually afford or qualify for, I will go over that in a different video, but you're more than welcome to send me a message or give me a call, and I'm more than happy to run through it with you. If this video helped clear up some confusion, then please hit the like and subscribe button. And if you'd like a free consultation to see which one of these loan programs you can qualify for, there's a link in the description where you can set up a Zoom call with me.